The US Federal Reserve's implementation of easing policies has not been expected or evaluated by us among the videos on this channel since last year. The reason for this is that the hexagrams in the Yi-Jing, or Book of Changes, indicate that the process of cutting rates is not yet initiated. However, last month this channel produced several videos showing that Yi-Jing's hexagram has changed. These videos can be searched for by interested viewers to gain additional information. Hello everyone, welcome to the channel devoted to the pursuit of happiness. Jerome Powell repeats, timing and pace of rate cuts will depend on data. Market participants will scrutinize Powell's speech closely for any new insights into the future of monetary policy. In particular, regarding the size of the Fed's initial interest rate cut in years and the potential range and timing of upcoming rate reductions. His words are expected to trigger a market stir, leading to intense volatility around the US dollar, while the world's most powerful central bank prepares for a policy shift beginning in September. In the July policy meeting, the Fed left the federal funds rate unchanged in the range of 5.25%–5.50%, shifted focus to the second component of its dual mandate, full employment. During the press conference following the policy meeting, Fed Chair Powell stated that the labor market has come into better balance. Powell stated that they are attentive to risks on both sides of the dual mandate, which is a change from their earlier claim of being highly attentive to inflation risks. The unemployment rate is still below average. According to data, the labor market has reverted to its pre-pandemic state. The labor market is showing signs of strength, but not overheating, as evidenced by a broad set of indicators. In business, as in life, not every journey reaches its destination. Sometimes the most crucial lessons lie in what's left unfinished. Join us as we explore the timeless wisdom of Hexagram 64 and uncover how embracing uncertainty can guide your business to lasting success. Are you prepared to embrace uncertainty as a strength? In Wall Street's heart, the ancient Yi-Jing guides us through modern economics. We seek its wisdom to decode the Federal Reserve's signals. Join me as we explore the Yi-Jing's insights on our economic future. In the intricate tapestry of ancient wisdom and modern management, the Yi-Jing's 64th hexagram, Wèi Jì, stands as a profound symbol of unfinished business. Representing a state of transition, this hexagram offers lessons on managing uncertainty in volatile environments. But how can this ancient insight benefit today's corporate world? The answer lies in its message of embracing ambiguity as a key strategic advantage. By acknowledging that the journey is not yet complete, organizations are reminded to approach decisions with patience, flexibility, and the understanding that every ending is a new beginning. How can ancient wisdom like Wèi Jì apply to today's corporate strategies? How does the concept of Wèi Jì translate into agile and adaptive management? Everything related to economic data will revolve around the Fed. The US dollar is experiencing a decline as it tries to maintain the gains it earned after economic data and Fed speakers gave the greenback a much-needed boost. The services sector appears to be resilient according to the upbeat US Purchasing Managers Index numbers, making it important to be cautious regarding current market expectations of big rate cuts. There has been extensive written and argued about what Powell will say. Powell is anticipated by markets to open the door to rate cuts in September, but he may not give a clear indication of when and how much the Fed will cut. At Jackson Hole, Powell's words will echo globally. Federal Reserve Chairman Jerome Powell said that the time has come for the monetary policy to adjust while delivering opening remarks at the annual Jackson Hole Economic Symposium. The Yi-Jing offers a lens to understand this pivotal moment. The Yi-Jing's Hexagram Wèi Jì speaks of imbalance. The Fed's actions will determine our economic path. We are in a transitional phase of risk and opportunity. The Yi-Jing's fire and water symbolize market duality. The Fed must harmonize growth and recession. We'll explore how the Fed navigates this delicate balance. The market yearns for clarity from Powell. Will he signal rate cuts or caution? The Yi-Jing reminds us to embrace uncertainty. The market's optimism often overlooks hidden dangers. Rate cuts can have unintended consequences. Powell must balance growth with long-term stability. Powell must balance market demands and economic stability. The Yi-Jing's wisdom guides his decisions. Success lies in embracing uncertainty and adaptability. Powell navigates between inflation and recession. The Yi-Jing offers a fitting analogy for his task. A steady hand and clear head are essential. The Yi-Jing warns against impulsive actions. Market expectations may lead to overreaction. Balance and cautious observation are key. The stock market is a cosmic comedy of errors. The Yi-Jing reminds us of the cyclical nature of change. Maintain perspective amidst market swings. When good news becomes bad news, the paradox of rate cuts. In finance, good news can be bad news. Consider the much-anticipated rate cut. The market prices in this event sending asset prices higher. But what if the rate cut signals weakness, not growth? Suddenly, the rate cut becomes a harbinger of uncertainty. The Yi-Jing reminds us that every action has consequences. Will Powell lean dovish? Will he channel his inner hawk? Or will he perform a linguistic gymnastics routine that leaves everyone more confused than before? In these choppy waters of market uncertainty, it's easy to feel adrift. But fear not, the Yi-Jing, like a trusty compass, can guide us. Adaptability is key. Adjust your strategies as conditions change. Diversify to mitigate risk. Spread investments across asset classes. Patience is crucial. True growth takes time. Avoid panic selling. Focus on the long term. Seeking value in overlooked sectors. The Contrarian's playbook. While the masses scramble for the latest hot stock, the savvy investor finds value in the overlooked and undervalued. The Contrarian dares to zig when others zag. They seek opportunities in the shadows of the market, where fear and neglect create deep value. Knowing the market sentiment will eventually swing back. For those with foresight, it can be a rewarding strategy. The Yi-Jing, with its emphasis on balance and the cyclical nature of change, teaches us that for every action, there is an equal and opposite reaction. In the realm of investing, this means that periods of irrational exuberance are often followed by periods of fear and retrenchment, and vice versa. The contrarian investor, like a salmon swimming upstream, understands this principle implicitly. They recognize that the crowd is rarely right for long, that the herd mentality that drives market bubbles can also lead to irrational sell-offs, creating opportunities for those with the courage to think differently. This is not to say that contrarian investing is simply about doing the opposite of what everyone else is doing. It's about independent thinking, about conducting thorough research, and about forming one's own conclusions based on the available evidence, even if those conclusions run counter to the prevailing market sentiment. The contrarian investor is not afraid to be early. They understand that the best time to buy is often when others are selling, and vice versa. They are patient, disciplined, and willing to endure the inevitable periods of underperformance that come with swimming against the tide. But they are also rewarded, often handsomely, for their independent thinking and their willingness to chart their own course. The ancient Chinese revered patience as a virtue, a quality essential for navigating life's complexities and achieving lasting success. This wisdom, enshrined in the teachings of the Yi-Jing and countless other philosophical texts, holds particular relevance in today's fast-paced financial markets, where the temptation for instant gratification can lead investors astray. Imagine, if you will, a bamboo seed planted in fertile soil. It may seem dormant for years, its growth invisible to the naked eye. But beneath the surface, a powerful transformation is taking place as the bamboo's root system spreads wide and deep, laying the foundation for its eventual ascent. Similarly, the fruits of sound investment often take time to ripen. Just as the bamboo farmer must patiently tend to his crop, nurturing its growth and protecting it from the elements, so too must the investor exercise patience, resisting the urge to chase quick profits or panic sell at the first sign of trouble. The Yi-Jing, with its emphasis on the cyclical nature of change, reminds us that the markets, like the seasons, ebb and flow. There are times for sowing and times for reaping, times for growth and times for consolidation. The patient investor understands this rhythm, accepting that periods of underperformance are a natural part of the investment cycle, and that true wealth is built gradually over time. Aesop's fable teaches patience and perseverance. The hare, confident, loses to the steady tortoise. This story holds lessons for investors in turbulent markets. Quick riches can be intoxicating. Headlines of overnight success, the rise of cryptocurrencies, fortunes made and lost quickly. It's easy to get caught up in the hype and make impulsive decisions. True success comes from balance and long-term focus. Like the tortoise, stay the course. Focus on long-term goals. Ignore the hare's distractions. The market is a marathon, not a sprint. The patient investor understands this. They focus on the finish line, knowing slow and steady wins the race. Half a year ago, this channel produced a video with the title, "How to Tilt the Odds in Your Favor by Winning Heads I Win, Tails I Win," using the tortoise and the hare to describe the current economic situation. Interested viewers can search for review courses. Impatience, that restless urge to force outcomes, to rush ahead without due consideration, can be a costly flaw in the realm of investing. Like a bull in a china shop, the impatient investor can wreak havoc on their portfolio, trampling over carefully laid plans and leaving a trail of broken dreams in their wake. The allure of quick profits can be intoxicating, blinding us to the risks that often accompany such seemingly easy gains. We see a stock soaring, fueled by hype and speculation, and we feel compelled to jump on board, fearing that if we hesitate, we'll miss out on the ride to riches. But the Yi-Jing, with its emphasis on careful observation and the cyclical nature of change, cautions against such impulsive behavior. It reminds us that what goes up must eventually come down, and that the market's embrace of a particular asset or sector is often fleeting, driven by sentiment rather than sound fundamentals. The impatient investor, like Icarus flying too close to the sun, risks getting burned. Their eagerness to strike while the iron is hot, to capitalize on every market fluctuation, can lead to poor decision-making, excessive trading costs, and ultimately a portfolio that underperforms its potential. In a world awash in information, bombarded by news headlines and market commentary, it's easy to get swept away by the currents of fear and greed that drive market sentiment. The 24/7 news cycle, with its constant barrage of data and analysis, can leave us feeling overwhelmed, anxious, and prone to making impulsive decisions that we later regret. The Yi-Jing, with its emphasis on balance and the interconnectedness of all things, offers a path towards greater mindfulness in our financial lives. It encourages us to step back from the noise, to cultivate a sense of inner peace and detachment from the market's daily gyrations. Just as the practitioner of meditation seeks to quiet the mind, to find stillness amidst the chaos of thought, so too can the mindful investor learn to observe the market with greater clarity, to make decisions based on reason rather than emotion. This doesn't mean ignoring the news or burying our heads in the sand. It means consuming information selectively, filtering out the noise, and focusing on the signals that truly matter. It means developing a long-term perspective, recognizing that market fluctuations are inevitable and that true success lies in staying the course, guided by our goals and our values. Ah, the market, that enigmatic beast, forever oscillating between euphoria and despair, greed and fear, boom and bust. It's enough to make even the most seasoned investor question their sanity, my friends, but fret not, for the Yi-Jing, with its embrace of duality, offers a framework for understanding these seemingly contradictory forces. Just as the yin and yang, those eternal complements, represent the interconnectedness of light and darkness, so too must we acknowledge the inherent duality of the markets. There will be times when good news is met with cheers and a surge in asset prices, and times when seemingly positive developments are interpreted as harbingers of doom, sending investors scrambling for the exits. The key, dear listener, is to avoid getting caught up in the emotional roller coaster. Just as a skilled surfer rides the waves, effortlessly gliding over the crests and troughs, so too must we learn to navigate the market's ups and downs with a sense of detachment and perspective. Embrace the yin and yang, my friends. Accept that the market is a complex, ever-changing entity, prone to both rational and irrational behavior. By acknowledging this duality, we can begin to see the bigger picture, to identify opportunities amidst the chaos, and to make more informed investment decisions. Rate cuts, those seemingly magical interventions designed to stimulate economic growth, are often seen as a panacea for all that ails the markets. But the Yi-Jing, with its emphasis on balance and the interconnectedness of all things, reminds us that even the most well-intentioned actions can have unintended consequences. Like a double-edged sword, rate cuts can both ignite the flames of economic expansion and fan the embers of inflation. On the one hand, they can lower borrowing costs for businesses and consumers, encouraging investment and spending. On the other hand, they can devalue currencies, erode purchasing power, and create asset bubbles that eventually burst with devastating consequences. The challenge for central bankers like our friend Jerome Powell is to find the sweet spot, the delicate balance between stimulus and restraint. It's a high-wire act, my friends, requiring a steady hand, a keen eye, and perhaps a bit of luck. The Yi-Jing, with its emphasis on careful observation and adaptability, offers guidance for navigating this treacherous terrain. It reminds us that there are no easy answers, no guaranteed outcomes. The best we can do is to stay informed, to adapt our strategies as circumstances change, and to avoid the temptation to chase quick profits or succumb to the allure of easy money. Riding the waves of change. The Yi-Jing emphasizes the cyclical nature of change, offering comfort to investors in turbulent markets. Just as seasons turn, the economy cycles through expansion and contraction. Bull markets, like summer days, can be intoxicating, but exuberance is followed by retrenchment, with fear gripping the markets. Embrace the rhythm, like a surfer riding waves, adapting to market changes. Embrace the cycles. Dear listener, don't fear them. So what's next? The Yi-Jing's enduring wisdom for modern investors. Amidst economic uncertainty, the Yi-Jing offers timeless guidance. Cultivate patience, resist quick profits, and embrace balance. Like bamboo, sound investments need time to mature. Diversify your portfolio and manage risk. True strength lies in adaptability. Never stop learning, the markets evolve. Step boldly into the future with the wisdom of the Yi-Jing. As we've journeyed together through the ancient wisdom of the Yi-Jing, seeking enlightenment on the Fed's likely course of action and its implications for the markets, a recurring theme has emerged: balance. Just as the Yi-Jing emphasizes the interconnectedness of seemingly opposing forces, yin and yang, fire and water, bull and bear, so too must policymakers and investors alike strive for equilibrium in their decisions. The Yi-Jing's whisper, faint yet persistent, urges us to proceed with caution, to avoid the extremes of both reckless abandon and paralyzing fear. It reminds us that every action, however well-intentioned, creates ripples that can have far-reaching consequences. Just as the small fox in the 64th hexagram must carefully consider each step before attempting to cross the river, so too must we approach the current economic landscape with a mix of prudence and foresight. The path forward may be uncertain, the waters ahead potentially treacherous, but by heeding the Yi-Jing's wisdom, we can navigate these challenges with greater clarity and purpose. The weight of the world, it seems, rests on Jerome Powell's shoulders as he prepares to deliver his highly anticipated speech at Jackson Hole. The markets are on edge, their collective breath held in anticipation of his every word. Will he signal a dovish turn, offering a lifeline to those fearing a global slowdown, or will he maintain his hawkish stance, prioritizing the fight against inflation above all else? The Yi-Jing, with its emphasis on the cyclical nature of change and the interconnectedness of all things, reminds us that there are no easy answers, no guaranteed outcomes. Powell's choice, whatever it may be, will have far-reaching consequences not only for the US economy, but for the global financial system as a whole. It's tempting in moments like these to seek solace in predictions, to cling to the pronouncements of experts who claim to have deciphered the market's cryptic signals. But the Yi-Jing, with its emphasis on humility and the acceptance of uncertainty, encourages a different approach. Instead of seeking certainty where none exists, let us embrace the unknown, recognizing that the true measure of our wisdom lies not in our ability to predict the future, but in our ability to adapt to whatever the future may hold. It may seem paradoxical, even a tad whimsical, to seek guidance on matters of modern finance from an ancient Chinese text. What could the Yi-Jing, a book written centuries ago in a world vastly different from our own, possibly have to say about interest rates, inflation, and the global economy? And yet, dear listener, as we've delved into its cryptic hexagrams and explored its timeless wisdom, we've discovered that the Yi-Jing speaks to something deeper, something fundamental to the human experience, regardless of time or place. It speaks to the importance of balance, of foresight, of adaptability, and of recognizing the interconnectedness of all things. These principles, far from being relics of a bygone era, are as relevant today as they were centuries ago, perhaps even more so in our increasingly complex and interconnected world. So, as we navigate the challenges of the 21st century, let us not dismiss the wisdom of the ancients. The Yi-Jing, with its emphasis on balance, foresight, and the cyclical nature of change, offers a valuable roadmap for navigating uncertainty, for making sound decisions, and for finding our footing in a world that often feels increasingly unsteady. As we bid farewell for now, dear listener, let us carry with us the lessons we've gleaned from our exploration of the Yi-Jing and its insights into the current economic landscape. May we approach the markets with a healthy mix of prudence and optimism, of skepticism and a willingness to embrace the unknown. Remember, dear listener, the market, like life itself, is full of surprises. There will be times when our best-laid plans go awry, when the unexpected throws us off balance, when the only certainty is uncertainty itself. But fear not, for within these challenges lies the potential for growth, for learning, and for discovering new and innovative ways to navigate the ever-changing currents of the financial world. So until we meet again, dear listener, may your investments be fruitful, your losses minimal, and may you always find a reason to smile, even amidst the inevitable ups and downs of the market's cosmic dance. This is Professor Yi-Jing, signing off. May fortune and a healthy dose of common sense guide your path. Thank you for your attention.